Hi, I'm Matthew Kidman, and it was only a few short years ago that when you were in doubt, you just bought Telstra. You rang up your broker and said, well, I haven't got any stock ideas. Why don't you buy some Telstra? 6% yield, stable earnings, go forward a couple of years, cut dividend, NBN problems. Telstra stock's down about 45% in 2 years. It's been a disaster. But here we are. Telstra share price is way down on where it was before. And joining me to talk about Telstra is Charlie Aitken from Aitken Asset Management and Jeff Wilson from Wilson Asset Management. Charlie, I'll start with you. Telstra, it's come down a long way. It's got a lot of issues. What would you categorise as its number one problem at the moment?
Still the dividend and the shareholder registry. You know, too many people bought it for the dividend, unsustainable dividend, and it simply cannot grow its way out of itself or spend its way out of what it needs to do with that dividend.
Jeff, Charlie's 100% right. Everyone's stacked into it, but things have changed, haven't they? NBN's come along, the government's changed the rules a bit.
And Telstra's probably made some mistakes, as they all do. And to me, it's interesting, the incumbent usually gets slaughtered with deregulation. And Telstra's held up a lot longer than we thought. And I actually think, as Charlie said, it's been a yield play, but it's really competition. That's their big challenge at the moment.
Okay, Charlie, Telstra, got a reasonably new CEO. Has he got the right strategies going at the moment, or is he going right down the wrong path?
Well, the whole thing again comes back to the dividend. The board has been too slow to act on the dividend. The competition has caught up in networks. Remember, Telstra had a big network advantage 3 years ago over Optus, where your phone didn't work, Vodafone, your phone didn't work. They're all on level playing ground now. Then you've got the NBN in the background. Look, I just think the obsession with the dividend has cost this company a wonderful opportunity, and I don't think they can fix it. And I don't think Andy Penn's the right man to fix it either, quite frankly.
Jeff, we talked about the NBN. We're all experiencing that in not so nice fashion at the moment.
Well, what the front of my house, the way it's been dug up, and when I drive out, I got to go have a little hole.
Well, we're all like that. But there's also things like 5G. It's going to require big investment. What do you think Telstra has to do in this changing environment?
I actually think it's a cost story. You know, it's a cost out story. You know, as Charlie said, the competition is increased significantly, and to continually potentially be an annuity play, which that's how we see it, and I think most investors see it, they've got to try to reduce costs as much as they can.
Charlie, there's always a price for everything. I get the distinct feeling that you don't think we're at the right price yet. So Telstra's got a lot of challenges. Could we start nibbling away and going the long side with Telstra?
Not yet.
If not, how far will it go?
No, I don't think yet. I think this will play out over time. I think the dividend's not found a sustainable base yet. I think the company hasn't got the mix right between capex costs and what they're going to do about the future. I think the company broadly lacks a strategy that I could identify right now about what they're actually doing about this. And look, I think it's one of those ones, because it's so well held, it will not recover quickly. You know, there's going to be sort of latent, stale bulls in this thing into any bounce, would be my view. And look, I think it'll grind around, probably grind a bit lower. Every time it goes ex-dividend, it'll fall more than the dividend, the franking credits. And I just think, quite frankly, your money's better elsewhere, for the time being.
Jeff, you always told me you love blood on the streets, and the Telstra shareholders have been pigs to the slaughter in recent times. So is it time? Is it a buy yet?
Again,
or are you in Charlie's camp?
Yeah, I'm in Charlie's camp. I think it's too early. Yeah, there isn't real blood on the streets. This is probably the first venesection.
Right, but it is yielding, under the reduced dividend, still a high yield given where the share price has gone.
But I mean,
what PE do you put on that yield? How long is that going to last?
That's right.
A year?
And to me, from an investor, buying something for yield, we're all taught, don't buy companies just for yield, because the yield might go away, and unfortunately that's what happened with Telstra.
Well, Charlie and Jeff, they're not quite ringing the bell on Telstra just yet.